Welcome to the National Property Market Update. I'm Lauren Staley from Your Empire in Melbourne and Infolio Property Advisors. We've got Chris Gray from Your Empire in Sydney, and we've got Zoran Solano from Your Empire in Brisbane and Hot Property Buyers Advocates. That's the one. Now we're here to talk to you about the property market. It's been an interesting start to the year. Zoran, tell us, what are you seeing in Brisbane?
Oh, mate, the market. So that little window I spoke about before the interest rate change came through has definitely closed. That little interest rate change has made a significant difference to buyer confidence in our market. And we're seeing buyers very, very active, especially in that first home buyer price point. So anything kind of below 800, even sort of up to 900,000, which in Brisbane means units and apartments or sort of outer area or outer ring houses. The market is hot. I heard of a unit just on the weekend. We were one of 14 written offers and it sold for approximately 50,000 or about, what's that as a percentage? What's my quick maths? About 8% above where we saw the value and where the selling agent thought the value was as well. Also a low set brick and tile house in Coomera, which, historically go back 5 years, there would have been, hardly anyone at the opens. Now they had over 20 written offers selling for north of 800,000 and we thought it was in the high sevens. So we're definitely seeing a lot of buyer activity. I think that's, been really pushed by the consumer confidence that comes along with an interest rate change.
So that's interesting, Zoran. Are you seeing any uplift in the upper end market, or is it specifically in this entry level market?
I think the entry level market have been the first to feel that bite of confidence. And obviously, first home buyers are often, or I'm generalizing, maybe a little bit more sensitive to their repayment amounts and interest rates and what they're doing. What I would call sort of middle market, 1.5 to 2.5 million, is still active here in Brisbane as well. There are buyers. But what we're seeing is a little bit of a disparity still between sellers' expectations and buyer offers. And sellers, I think in some ways in that middle market have overestimated the effect of a small interest rate change. I've got some clients who are thinking about selling and they're going, oh, I'll wait another month or two. The market's only going to get better. Well, that may well be the case, but also as well, it's such an unpredictable market. North of 3 million here in Brisbane has taken a little bit of a slowdown. We're finding longer time on markets and buyers are being much more cautious with what they're buying north of 3 million here.
Chris, what are you seeing in Sydney?
Yeah, look, certainly I think the interest rate drop was a good change for a lot of people. It's a great start to the new year, and I think it will really change consumer sentiment. However, because we've had such a long period of rising interest rates, I think it's going to take more than one to actually really take effect. So speaking to some of the agents, a lot of the auctions aren't necessarily selling on auction day, but there may be selling a few days afterwards. And we've got a mixture of clients. We've probably got half in one camp that they trust the process. They know that we're buying on a valuation of, say, $1 million, which is conservative to paying maybe $1,050,000 or 1.1 at auction. They're jumping in straight away. They're taking the advice and they're buying properties and they're absolutely over the moon. And then we've got another kind of 50% of the clients that are sitting on the fence, that we've told them the process right at the start, but they're still trying to get that $1 million property for 800 to 900, which, as we know in the blue chip suburbs, is just not going to happen around that median price. And some of them have been on for 6 or 12 months and they're still not quite getting it. And it's really hard to try and get across to them because with 30 years experience, we've seen so many different cycles, we've seen the markets, and we know the main people that make money in property are the ones that take action. Whereas trying to find that ultimate bargain, by the time you find it, ultimately the price has probably moved up 100 grand anyway, so it isn't really that bargain. And so that's a frustrating thing for the team because they're getting off markets. They're coming up our yields. Some of the times we're getting well over 4.5% yields, which is great on a $1 to $2 million property, but sometimes can't recognize a deal when it's right in front of their face.
Remember my saying, mate, all you get from sitting on the fence is a sore bum. That's it.
Well,
Sounded like a true Queenslander.
yeah, like a true Queenslander. Well, Melbourne's been an interesting market. there's really, we've got some areas, you know, if we're talking about the inner blue chip, we've got Stonington and Burundara, which is seeing real depth in its buyer pool. So there's competition at nearly everything that we're going for, which is good. I mean, it's showing that the activity is back and there's depth. There's 2 to 3 buyers per property. Whereas Bayside, we're really not seeing the same amount of depth. There's really 1 buyer per property. Bayside, I'm talking about Hampton, Sandringham, Brighton, not so deep as, not as close into the city as Albert Park and Middle Park, but that particular pocket, which is interesting. I don't know whether it's because there's newer money in that area. It's not as well established, and therefore they've been more impacted by the changes and the shifts in, you know, interest rates and what's been happening in the wider financial institutes. But there is a 2-tiered market. I think that there's real opportunity in Bayside to buy well, particularly if you're buying an upgrading your home, because that will shift. It will follow suit eventually. It's just lagging a little bit compared to the other inner blue chip areas. The first home buyer market, I mean, we don't do any work in that space. It's not our best specialty, but we are seeing that is moving really, really well. Just like you, Zoran, it seems as though, well, for us in Melbourne, the rents have gone up. Rents have gone up quite significantly. So people are shifting from rentals to first home buyers. So we're seeing that sort of trajectory down here. But it is a vastly different year to where we were in 2024. The confidence has changed. The people's attitude has changed. And I think the only thing we're now dealing with or contending with is the nuffies who want to talk about the election and whether they should wait for that. They're the people who are usually finding something to wait for. Interest rates are too low. Interest rates are too high. Interest rates are going to go up. Interest rates are going to come down. There's an election. Trump's coming into power. There's always a reason not to do something. But they are the ones, just like you said, Chris, that often end up missing out altogether.
Lauren, quick question for you. How is that translating through to investor confidence in Melbourne? Because obviously we know that for the last year and a half, we've seen a mass exodus of a lot of investors out of Victoria.
Yeah.
What you just said sparked confidence in me going, well, your rents are up.
Yeah.
Buyers are probably still a bit more subdued.
Yeah.
Are you seeing investors gaining confidence and coming back to
We are seeing investors gaining confidence. I mean, it's certainly got a long way to go, but I'd argue that it's the best buying market for an investment property in Victoria that we'll see in a very, very, very long time. I can't imagine it being at any worse level, but the rents are going up. There is huge pressure on it. There's huge demand on properties because we're outgrowing the number of homes that we've got available. So it's just a simple supply and demand thing. They'll continue to go up. People are moving out of their investment properties and moving into first homes. So there's a real shift in what's happening in our market. But also rents are being pushed up because landlords need to get more money to account for the additional taxes we've been charged. So it's all happening as a result of, you know, government wanting to provide more accommodation for people. It's probably doing the polar opposite.
Yeah, for sure, for sure.
Yeah.
Just to go off script a little bit at the moment, if I was an investor with 1 million to spend, which seems a typical round number for a lot of investors, what is available in Melbourne circa 1? Are you going to a house further out?
Yeah, we're going, no, very clearly for us, we'd be going to Carrum, Seaford, Bayside, it's deep Bayside. So it's down on our coast. So it's close to the beach. It's got villages. It's got direct access to the CBD, or we'd be going to Geelong, where you can get a house and land. I mean, for us, you know, apartments, we just steer away from them from an investment point of view. That's not to say that there aren't good apartments that you could buy, particularly as our metrics are changing and there's going to be more pressure on apartments. We'll start seeing the growth that we've not been seeing on apartments for the last 5 years. That will shift. So there could be really good opportunity there. But, you know, the land appreciates, the house depreciates. So in our view, in Victoria, in Melbourne, if we can, we'd be buying a house with land, good orientation, house positioned at the front of the block, good 3 to 4 bedrooms, solid brick, and that's going to have good long-term capital growth.
Yeah, for sure.
Now, Chris, we've got the core logic stats. Do you want to share those with us?
Yep, I'll pull those up now. So as usual, they come out right in the first couple of days of the month. Yep. For those that won't be able to read it on a small phone, Sydney for the month, we're up 0.3%, down 0.9 for the quarter, and positive 1.1 annually. Melbourne is 0.4 positive for the month, which is a great turnaround, minus 1.1 for the quarter, and minus 3.2% annually. and Brisbane up 0.2 for the month, 0.9 for the quarter, and 9.7 annually as well. And just to look at Perth there, Perth has actually slowed now to 0.3% in the month and the quarter, but 14.3% annually. So certainly there's quite a bit of a change there. And I think I mentioned last time that the thing to do with these things is to look over 30 or 40 years, not looking from month to month, because certainly from Perth, when I got the latest stats, I think the median price was something like 450 grand from 2007 to 2021. So if you were in Perth for that amount of time, you wouldn't have been able to pull out equity to help cash flow the property or pull out equity to keep repeating. And so even if some other suburbs or states were going lower, at least then if it's moving upwards, you can keep compounding and repeating. And compounding, leveraging, that is the key to wealth creation.
Fantastic, Chris. Well, it's good to see a little bit more buoyancy in the market, particularly for Melbourne, the poor underdogs of the last 12 months. Now, before we part ways, anyone got a good hot tip for the next month ahead? Zoran, I'll start with you.
Yeah, hot tip at the moment. What would be my hot tip? My hot tip would be you need to be quick to action on good properties, which is always the case. But I'm just finding that little moment of hesitation is costing buyers at the moment. If there is a pre-market or off-market opportunity, jump on it, take action, because that window may not be open for long. Once it hits the market, everyone and his dog is going to be at the open.
Right. And Chris?
And look, I'm pretty much the same, but we've all been very, very consistent for the 10 odd years or 10 or 15 years that we've all known each other, and it's taking action. Again, pretty much at this time of the year, I actually have to remind our marketing department, when we survey our whole database, there's maybe 15, 20,000 people on there, and 99.9% of them say, I wish I'd done more, I wish I'd taken action, I wish I hadn't sold, I wish I put more money in the market. And that's the things. But at the time, you say, 1 minute it's interest rates, then it's Trump, then it's the elections. There's always an excuse not to do it, school fees, whatever else. And the thing is you've just got to go and do it. And I'm not any cleverer than anyone else, but the difference was between 20 and 30, I just bought really hard and I held on.
Good tips there. My parting tip will be, in Victoria in particular, people haven't wanted to touch properties that have needed a renovation in some time because the cost of construction had gone up so considerably. Those costs are now starting to stabilize, and where they're actually not heading, and they're certainly not going further north than what they were. So there's opportunities to buy homes that need work done because there'll be less buyers on it, but the costs aren't going to blow the budget as much as what they were maybe 6 or 12 months ago. So you might find yourself able to secure a home in a blue chip area that you're otherwise priced out of. All right. Thanks, everyone, for joining us. It's been another great month, and we look forward to catching up with you next month. I'm Lauren from Infolio and Your Empire in Melbourne.